Hey guys, so does the thought of investing in stocks excite you? Do you wish you knew which investment strategy is best for you, but you are just not too sure where to start as you are scared of losing your money? It's not uncommon for people to want to invest but not know where to start. The problem is not making your move could be costing you money. If you have some money sitting in a bank account, take action and try these simple moves to grow your wealth as money sitting at the bank account simply depreciates over time because of the inflation. But before this video, guys, please like this video and subscribe to my channel as it keeps me motivated to create these videos for you guys. Now let's get started with the first tip. Research before diving in. Yes, it can be risky to put your money into an investment, especially if there's risk involved. But don't stop there. There are lots of rewards too. The best way around this is to do some research. Find an investment strategy you are comfortable with and educate yourself on how it works, the risks, and the opportunities. Education can alleviate your investor fear. Second tip is start small. You don't have to dive in with all of the money you have in your savings account. Start smaller with an amount you are comfortable with and then make consistent contributions over time. Small sums of money can help you to grow your investment goals over time while working out that investor fear. Just use dollar cost averaging strategy by investing set amount of money every time. You can even make these contributions automatic. The third tip is ignore the scary news headlines. Yes, scary news can be worrisome and it may seem like now is never the right time to invest. However, investing has a great deal of potential over the long term and you will always see bad news along with good news. That's just how it is. If you are looking for a quick profit, that's harder to do, but if you're in it for the long term, perhaps to help you retire early, those headlines are less important to you now. The next tip is to have an emergency fund. When you hit a rough patch or have unexpected expenses, having a backup strategy in an emergency fund can give you some peace of mind. An emergency fund that covers your expenses over 3 to 6 months will help you to manage those down periods well. Plus, having that money there can help you to know that you can take this opportunity to invest. The next tip is to set clear goals. Though it's possible to do well quickly, it's also important to create a long-term investing strategy. That in itself can seem scary, but it doesn't have to be. The key here is to create a few goals for 1 year, 5 year, and 10-year mark that can help to give you something to work towards. It also allows you to see your progress over time, which gives you the confidence you need to continue to invest. So if you want to get a certain amount of asset value in the next 10 years, set up a strategy to reach that goal at a pace that feels right for you. For example, if you are starting from zero and want to reach $1 million in 30 years, then you will need to invest $736 per month for 30 years, assuming 8% investment return. This will get you your target of $1 million in 30 years. The next tip is to just go for it. Investor fear is very real. Everybody is afraid of losing money. Often, you simply need to go for it. That is, put the money into what you are considering and take a chance. Immersing yourself in the process allows you to get over that initial, difficult first step. It gets easier after that. The next tip is to start with a retirement account. A retirement account could be an excellent starting point because it offers more stability and less for you to do on a consistent basis. That means you can watch your investments grow or fall in value over time. You will not only be contributing to a tax advantage strategy, but you can also learn more about the investment process and monitor changes over time. That can give you some insight into how to make your additional investment decisions later. The next tip is to don't wait until things get better. Some people tell themselves they'll invest when the market turns around, yet when markets are better, they are also more expensive. By investing when markets are down, you're creating an opportunity for more growth, and investing steadily over time means that your returns will average out over the market's ups and downs. In short, don't wait until the market is thriving to start investing. Your money won't go as far. The next step is to define your risk tolerance. Every investor has a risk tolerance or a level at which they feel there is just too much risk involved. One way to get over investment fear is to recognize what's okay for you and what's not. How much could you lose in the short term and still be okay financially? How long is it until retirement? If you have more years ahead of you, you may be able to take on more risk because there's much more time to recover. The last tip is to always educate yourself. One of the reasons you may be overwhelmed is that there are so many gurus and experts offering opinions that it's hard to know what's what. Perhaps you need to learn to tune out the experts and learn for yourself. There's plenty of good information out there and readily available, not just opinions of marketing gurus, as one of the main rules of investing is do not invest into anything that you do not understand. I hope these tips will help you to get started, guys. What's your biggest fear in getting started investing? Is it the fear of losing money? Leave your comments down below. So guys, if you like this video, please press thumbs up and subscribe to my channel. Your likes keep me motivated to create these videos for you guys. Thank you for watching and see you in the next video.